Hi friends, let's take a look at Link versus Bitcoin and Link versus the US dollar. Who am I? I'm Rocky Outcrop. What do we do here? Daily crypto technical analysis. And on what coins do we do it on? Bitcoin, Ethereum, ChainLink and Tezos. And that is what you are subscribing for, yada yada, all the rest of it. And if you haven't subscribed yet, well then you must be crazy. Welcome back to the charts. Let's take a look at Link. Now we've discussed this ad nauseum over the last, well, I mean we discuss it every day, but there's various things that we've discussed about Link over the last wee while and what areas to look out for and all the rest of it. So as this price action's been going on over the last wee while, you won't have been shocked overall as it's happened. And what are we disappointed? Well, let's just start off with the weekly chart, right? We're kind of disappointed in the weekly time frame that we didn't actually make that high. We spoke about it for a long time and how we wanted to see the prices remain above that 50,500 area for that to happen. If not, we had this, and we also had this kind of, fairly arbitrary, but let's just look at it anyway, upward sloping trend line that we said, look, we don't want to break down below that. So where the 21 EMA is coming in here on the 12-hour chart, for instance, and if we did break down below that, where could we look to? Well, we had this 236 in mind here at 48,000, where we had the 21 EMA as well on the daily time frame, and the 618 retracement there. And we said, look, there's a few areas down here we could very easily visit that. That could be somewhere where you could manage your risk at fairly easily, in terms of lower risk management longs, clearer. Your risk is diminished by having less obfuscation there when you're looking at your targets and where how you're getting in, what's going on, where the pivots are. That's what diminishes risk, because ultimately there's unlimited risk with trading, no matter what you do. So that's how you manage it, and that's why I'm saying lower risk. I'm not a financial advisor, none of it's financial advice, by the way. So just to be clear. But anyway, so then what's happened subsequently is we've gone down below this 236, we've gone down below the 21 EMA. Where reasonable targets to look out for towards the downside is this 45,000 area that we could be going to. But of course, we also have to acknowledge that this was a high on the daily time frame. This was a high on the daily time frame. This was a low on the daily time frame. So it went high, low, higher high. Then this was a lower low on the daily time frame, and this is a lower high on the daily time frame. We have to accept that. That's the truth of it. If we go up and we're looking for different stories, the 2-day doesn't actually alleviate that pain at all. It's exactly the same story. The weekly, it looked like we could have almost have got the higher high in the weekly whilst we had a lower high in the daily. We weren't so keen on that idea as a concept overall, and well, it's not happened really. But then if we go over to the monthly time frame, where we've been looking at this recently and saying, can we have are we going to actually continue to put in highs on the monthly to continue to go up or whatever? Looking here, we can see that there's so much noise in the chart that it's hard to see anything. Is what we can see is that where that 618 retracement is actually right there where the body of that previous month or 2 months actually really kind of closed that, and we wanted to see the 48,000 be maintained in order to continue that going up the way. Now of course there's still time left in the month, and that could absolutely happen. Of course as well, this could all just be part of the trend. Maybe this is this starting off next month from around 46,000 and looking towards those higher areas is much easier than it was starting off this month down here towards in the 30,000s, so there's all that to be taken into account. However, it's not happened yet, so we have to acknowledge where we are. And then going back down here towards the sort of lower time frames, what do we have? What is this? Is this Adam here? Is this Eve here? Is that what we've got on the go? Who could really say, not necessarily see, but looking at this time frame, if the prices were to come back up above that 46,800 area, up another sort of 700 or so from where it is currently, and then went up again, could we then potentially start to be looking? We'd have to be wary in and around where this is at this level here, in case the prices were to do something like this, where they would have a reversal formation on there, such as a head and shoulders, for instance, for instance. But of course, this Adam and Eve and Adam and Eve could also be considered to be the same sort of a thing there of that. If we were to break down below, really essentially the areas where we're looking at now, that's the first point of the first thing there. Break that where we are currently. If we keep going down, then I can see the prices easily going down to 44,000, 45,000, and that could. But this haphazard drawn in line that I've got here could be considered a sort of neck off the back of this thing. You could sort of look towards that, and you could sort of look towards that, and you could say that our what would come down and revisit the 200 simple on the daily time frame again here, or the 12-hour, whatever, down here. Sorry, on the 12-hour, but on the daily time frame, come down and visit these key areas that we had drawn in. 50% retrace area, this horizontal blue line at 39,000, and the 236 Fibonacci there at 38,700 area. All of that could all be in the offing, but that's a bit of a distance away. What would actually happen if you did go down there is you get the full golden retrace on this as a short-term move. So, you know, that's the situation that we're looking at there on that one. We've had the diminishing volume throughout this period. We thought that something had to give as well in terms of the highs here as well. We had the bearish divergence. You know, if you're paying attention to these things over the longer period of time, of course, we had bearish divergence between this point and this point, as well as having bearish divergence between this point and this point, where the latest two highs. So, you know, that was all there to be visible, to be seen, as we discussed. It wasn't on the MACD between oh no, it was on the MACD. So I take that back. Sorry. You know, the divergence. Sorry. What I'm saying here is that that's actually hidden bearish divergence, because we got this high here with this high in the MACD. We got if this had have turned out to be a higher high and the prices had achieved up there, then having the oscillators come up to these higher points here would be absolutely fine. You know, that would be convergent with that, but instead it isn't. And what we have previously is a lower low, and currently got a lower high on the go. So then there's actually going along with hidden bearish divergence, which is what we said could happen as well throughout this sort of period of time. So that's not great. That's not great. There's not the Linky Schminky let me down here a little bit, but you know, we've got some key areas where we can look to for potential turnarounds here in order to go back up. And on the big picture, you know, you don't necessarily have to go in straight lines to places. You know, if we were going up here to make this higher high, it's a shame that it didn't do it off the back of this parabolic move, you know, because that would have been the momentum appeared to be there for the biggest chunk of it. Didn't actually manage to make it up there. But you know, could we come down and then go up again? Sure, you can get corrections. But the concern with that boils down to the fact that we've got this Fibonacci retracement points here where we look like we've got, you know, we've got a valid Fibonacci. So until such times as the prices are back into that 48,000 again, we have to remain, we have to sort of look towards these other areas. Going into the USD prices, then what have we got? Well, we had that shape on there, or you could have had a measured move, I suppose, on the back of this, and you could shove it over here and say, well, we've only got half of that so far. We don't like to focus too much on measured moves on the channels, but thinking, could the prices come down to 345, where we see the 21 EMA at on the daily price on the daily chart? You know, that's possible. What does that line up with our previous low? So we wouldn't want to see it coming down and sort of equaling our previous low. Ideally, it would turn around from where it is now, but if it did do that and closed above this area, then at least we're not putting in a lower low. Going down below this area, we're putting in a lower low compared to this this questionable lower low that's there, you know, that or higher low that was questionable whether or not that was actually it, or if this was just the overall upward movement, and this is our last one, in which case, you know, any prices down below to $3.15 in fact would be staying above those areas. But you know, if we were to visit down there, then you'd also have another full-on valid Fibonacci retracement area, having gone between between these two areas here. That would be a valid 236. You could be looking towards further targets to the downside, and in fact 282 would be back on the table there. So we don't want to see the prices closing below there overall. We'd rather see this trend continue, but you know, diminishing volume, rising wedge, lower lows, or lower high, between the 2 points here. If this becomes a local high, looking over to here in the past as well, there's that hidden bearish divergence we spoke about on the Bitcoin charts. In terms of looking just between these last recent highs, there's just classic bearish divergence between the recent highs and the run up to breaking out this thing. So you know, that's all what's been going on there, has to be admitted. And at the time that we're looking at this, you can see in the 24-hour chart, you've got this red dotted line coming right down here to where the white dotted line's coming on up, and that there is looking at death cross questions. Now, when these things cross, quite often the price action likes to revisit and test them just to say hello. We've seen that a million times in the past, and so you know, we can bear that in mind as it happens as well. Another thing to bear in mind is that the red, that as we approach there's only, you know, a few days left in May or in April before we're in May, and when we get to May, the this price action that's up here, that's This pricing up action up here had been supporting the 50 simple in a sense, that was part of it, but it's gone now and was replaced by this as part of our current calculation. But then by the 1st of May, this downward price movement will go away, and every day into May we'll have if the prices are above, this area here and they're operating up here, then you're having a higher number to add on to this average for this 50 simple. So that would hopefully try and take it towards the upside as each one of these days gets taken off of the calculation, and instead you add on one of these days over here instead. Then that's how that would work. Obviously, I don't need to explain simple averages maths to folk, but that's what we're kind of looking for. Could we actually end up retesting this area as part of it overall? We could, and things like $3 flat, 285 and stuff like that, you'd want to see them operate as support. Generally speaking, though, I'm not wanting to get too carried away, and any moves down to 327 would just be the measured move off the back of this, and could give the oscillators a chance to reset for us to be able to continue what could have overall really have been higher highs, especially and higher lows, especially if we see all of that bearishness play out and not go any further than this line over here at the sort of $3.15 area, and we set in another higher low as part of this overall upward trend. So that's what is to be looked out for. The final note on that front, in fact, I suppose, is to say, should we do something like this and then actually just come back up from here to where the Fibonacci retracement line is, our horizontal thing, the 618, and a horizontal line and everything else in that area, then you'd potentially be looking at head and shoulders, in which case you could draw a measured move off the back of that as well. This is like there's going to be one of these no surprise things here for us, or no surprise, but that it could potentially take you down to where we see all this confluence of different price action happening at, depending on how things are shaping up at that time. We'll revisit it then, of course, but that kind of brings us up to speed. Thank you so much for tuning in. Thanks for being a part of this channel growth. Thanks for being a part of being aware of what we've been looking at over the charts over the last wee while. Join the Discord if you want to discuss things with me personally directly. Leave comments down below also as well. Tweet at me if you like, and be aware that there's a Bybit sort of bonus giveaway for the first few people that use the link. They get $10 credit to their account for free. I recommend. I'm also grateful for people to not jump in onto that and to just let the people who are newbies use it. So a couple of newbies so far have got advantage of that, and that's great, and I want 3 more or whatever to get that too. So so look out for that. And of course, then over the next couple of weeks, if you do go ahead and use the Bybit referral link and deposit into there, you get a bonus or whatever. But I'm going to stop shilling that soon because it super bores the shit out of me saying that to people on channel, and I'm not into it. I'm not into that sort of thing. But whatever, that's great. Okay, yeah. And Bybit is actually a good exchange. I can recommend it, but I'm not selling other people's stuff here. Right, so yeah, great. Not financial advice, not sponsored or any of that crap either. And I'll catch you in the next episode. Thanks so much for tuning in. See ya.